Okay, everyone, welcome to the live show. Uh, we'll do some legalities before we get started here while we wait for everybody to sign on. Past performance is no indicator of future performance. We are not registered or certified investment advisors. This is always for entertainment purposes only. Nothing in the show is a offer to buy or sell any security or commodity or anything like that. It's a windy day today. We've got one of the windows in the trade room open. It's a windy day. It's nice. Looks like summer's coming around. So let's kind of get started, right? Because it's Friday and, it's been a long week. The market seemed pretty tired today. We ended up, the Dow ended up about 100 points. The S&P ended up about 13 points. And even the NASDAQ ended up pulling out a little green day there. The Russell 2000 was down. The small caps were the laggards. You remember a few weeks back, the small caps were the leader. And the big stocks, the big indexes were basically falling down. So it looks like kind of things have switched. And now the broad indexes are kind of taking control and the small caps are suffering a little bit. Not much. I mean, they're down 0.5% again. Hey, you look at the VIX there on the end, that thing's under $12 now. Anything under 13, 14 is real positive for the market, right? And that thing is just going down. It's down about another 55 cents today, or almost 5%. So volatility is just not happening. Even with all this Trump talk and all this stuff, impeachment, trade wars, quite a few of the big analysts have come out in the last few days and said, Merrill, who was it? Morgan Stanley had the big announcement about how they think there could be a 25, 30% sell down in the markets. It can happen any minute. You bet it could happen any minute. Tell us when. Anyway, that's the trick to it, right? And so let's kind of get into the show because it was kind of a long week. Everybody's tired today. A lot of options expiring. Not a big options expiration day, but enough to probably taper the market a little bit. But let's talk about what we're up to right now because we still like the market going forward. We still think we're in a good position to maybe get another shot at those all-time highs and stuff. And we'll see how that plays out. If that doesn't work out, we're always ready. But, we opened up 2 new trades yesterday we talked about. One of those trades was we went short AT&T. Telecoms, generally, rising interest rates are not favorable to telecoms. And there's some other things going on in the industry that kind of, AT&T is just not keeping up. AT&T is generally a very reliable company, being on the front end of technology and things like that. It's kind of showing some laggards, some lagging in it. So we decided to take up a short play in T, and we went maybe about $1 out of the money and about a month and a half, 2 months out. For those of you that are following along. We also went long Twitter yesterday. Twitter had a tough day this morning, but it ended up bouncing back at the end. What did Twitter close at? Let's just check it with you real quick. 31.94. It closed just under that $32 range, but it was above that support. It's got a big support level. I think it was 31.80. So it held that fairly well. Let's kind of get into, we opened another new position today. We cashed in that QQQ trade yesterday for that nice 25% gain. And that's a nice trade. We're not day traders at stockpickprofits.com. We're opportunists, we're wealth builders, but we're not really day traders. So, we believe if you get a nice 25, 50, 100% win a week, man, you're going to do really well. Some weeks will have a lot more than that. But, this week we came into the week with a defined strategy, right? We wanted to open up a Q position early in the week and kind of catch the Apple earnings and some other stuff, the economic numbers. And then we were planning to cash those out no later than Thursday, which we did on Thursday. We cashed it out for a 25% gain. And that was our strategy. And then we wanted to go into Friday. We knew Friday would be a lethargic day. It's just been very, very draining on the market, on traders. So, you could feel it in the market today. Even Twitter, the volume was so low. We checked just after lunch. It wasn't even half the daily volume. So it was just really, really lethargic. So we wanted to look today to see if we could get some good pricing. We were looking for a short on the miners. GDX is the gold miners. Gold miners, just like telecoms, interest rates are not their friend. And plus two gold, the spot price has just been trickling down, trickling down. That'll reflect in their profits, in their balance sheets, in their earnings reports going forward. So, we wanted to look for a shorting opportunity, but every day this week, gold has gone down, down, down. Well, finally, we got a little bounce in it, so we shorted into the strength. Whenever you're making plays, it's the old saying, right? Buy when they sell, sell when they buy. So when you're setting up a short, you want to get the best pricing, the best premium pricing. So you get in when it's moving up, and then it turns around, and you've got good pricing. And that's what we did. So this week we came in with a very defined strategy. We wanted to open those Qs early in the week. We wanted to sell them by Thursday at a profit, which we did. Then we wanted to take the rest of Thursday and Friday to set up some positions for going forward, which we did. Like we said, we went long Twitter, we went short AT&T, and we went short the gold miners GDX. So that's how we were playing it. Sorry about the wind, gang. Even the moose isn't helping. We shorted the miners. That was our last position of the day. And that's what we're going to roll into next week with. We still got the AINV play we've been talking about. That one's just right outside the money, just about 7 cents outside the money. So that one's gelling real nice. And we've got our marijuana play. We like SCNA. We've talked about that before. We haven't really mentioned it recently. Bitcoin had kind of a rough day today again. We were talking about that a couple times this week. So we'll close out the week kind of talking about that and how that bubble works, right? You see how it's working now. It sucks people in, then it deflates, sucks people in. And we're just getting that, right? One after the other. Suck people in, deflates, sucks people in, deflates. So let's see if that continues. We saw a lot of talk on the boards, on the stock pick boards. A lot of people were talking about GBTC, which is the Bitcoin Trust. If you're looking for a stock to play for Bitcoin, that's a pretty easy one. The only problem is the margin requirements on it are high and the fees are high on it. So be careful. It's not a buy and hold stock. It's something you kind of want to get in and get out of. We've played it in the past and made a little bit of money off it, but we've been staying away from it recently. We just don't like the action in Bitcoin, and it's just getting too hard to predict, right? I mean, one piece of news comes out, it pops up $700-800, and nothing happens, and it's down $708. So we're kind of, it's not worth the risk to play that for us right now. If you're playing it, good luck. We hope you do well with it. So, we'll kind of close out the week. Like we said, it's been a very, very busy week. It's been a long week. So everybody's ready for the weekend. We hope you guys are ready for it too. We'll be back on Monday and we'll follow up on these plays, but that's basically where we are right now. We still think there's some run left in this market. The problem is we're pretty much through the bulk of earnings, the big companies. So you got to find a catalyst in there. Where is the catalyst to push this market higher? Is it an announcement of Trump? Maybe something with the trade. Where is the catalyst potentially to push the market lower? Something happens with North Korea, something happens, with the Trump administration. It's kind of a gray area right now with catalysts. Like going into this week, we knew we had certain catalysts we probably could count on: the Apple earnings, the jobs number, and things, the economic reports on Wednesday. So now you have to ask yourself, going into next week, where's your catalyst? Well, we're kind of in that gray area. So you want to position well. You want to make sure you're positioning very good trades with very good pricing, and just kind of play it from there. Right now, technical analysis kind of takes the forefront, right? Because you don't have these news catalysts to rely on, run-ups into earnings. Now, we've got some social media stocks coming out next week. Snap, which is one we're long on Snap, and we'll ride that towards earnings. Earnings on Tuesday. And that's not a big earnings, but it's kind of a popular earnings, right? A lot of people are in Snap. So let's kind of close the week out. It was a great week. We cashed in a 25%er, which is always awesome. We opened up some new positions, and we're still carrying a couple positions from the past. So you guys have a great weekend. If you've got any questions, any comments, absolutely post them in the comments section. We do monitor this. So if it's something we need to answer in the show, we'll answer it on Monday. If not, we'll answer it right there in the comments. So All of you, thank you so much for joining us. It was a great week. Hope you had a great week too. You have a fantastic weekend, and we will see everyone on Monday.